Welcome back to Great Minds Think Alike. I'm Gabby.
And I'm Nick.
And today we have a really educational piece for you today.
Oh, yeah.
Really important things with our business and lifestyle. And we're going to be going over taxes, which is going to then flow into our real estate topic.
Yeah, so for our business topic today now, this is something that I might get a little too passionate about. Our topic is what you make is not what you make. Say that again. What you make is not what you make.
We're going to be going over gross income versus net income.
Yep.
So gross income is what they're telling you that you make.
Yep. So that's basically, let's say you have a salary, you get a job offer at $80K a year. That's your gross income, the $80K. Mm-hmm. Now, your net income is basically what goes into your bank account in the simplest terms. It's after all deductions, taxes, and everything else. Your net income is what you're actually going home with. Now, this is the biggest issue with a lot of people in their budgeting. They budget off of their gross income and not their net.
And that's what gets people into a lot of trouble. Just spend. And people also, like, if they get a new job, for example, they have an $80,000 salary, they're spending like they have that as a bonus. No. And it's not. You get paid biweekly or however often. But
exactly. So that was the driver behind this episode, is that we see so many people that they have this number they make, even if, you're hourly, you think you make a certain amount per hour, and we want to show you that you don't, and that what you're told you're making isn't actually what you're making, and you need to budget on what you come home with.
Yeah.
So, to start this, we actually pulled together an example pay stub for you from a check where the gross income that was told that was being given was $3,400. So we have all the stats in front of us. Gab, do you want to start? So actually, before we start reading it off, if your income for this biweekly paycheck is $3,400,
guess how much, just keep in your head, guess how much it's going to be deducted.
Yeah,
and what
think
your
at
net
home
income
before we go
is.
through. Get a number in your head. $3,400 is what you're told you made. Mm-hmm. Think about how much you guess you're going to make. All right, Gab, so do you want to read the first few? I'll get the second few.
Yeah, so the first deduction is federal tax, and it is $374.
The biggest one.
Yep. Social Security is next, which is $211.
And that's paying into Social Security that people are getting when they're of age to collect, 63 or 67, depending. So you're paying for other people to have a wage.
And by the time we're that age, is probably not going to be a thing anymore.
It's questionable if we're even going to get it, yes.
Medicare is the next one for $50.
Yep, and that's paying for people who need help with medical expenses. The next one on here, NJ state tax, which is $137.
If you're in another state listening to this, we have very high taxes in New Jersey, so take that with a grain of salt.
New Jersey state tax. And now these next two are going to depend on your medical plan, but in this specific paycheck, $74 came out for medical benefits, $13 came out for dental.
Yep.
So all of that money that we just mentioned came out going to other people, to other places that aren't really helping you. Now, the last part of this, I wanted to say this separately, is the 401k. In this example, $170 went into the 401k. That is really the only part of the deduction that's helping you. You could argue the health insurance is helping you. I would argue that it's a scam and it shouldn't be this expensive because you still have to pay in the doctors. So
yep,
I don't even consider that going back to me. I consider that me paying into the scam, which is the American healthcare system. Told you I got a little passionate today.
That's another episode.
Yes. So all of those figures together, can I get a drum roll? Your take-home pay is $2,371. So we went from $3,400 to $2,371.
That is close to 1/3. It's insane.
Wow. Yep. So literally close to 1/3 of what you earned is what actually would hit your bank account. And this is where people go wrong. It's an honest mistake. They get a number in their head they're making. They don't realize that their paychecks are getting dissected and sorted out like this. And they end up getting into debt or overspending because of I'll blame it on the government. I'll blame it on these deductions because they're spending what they think they make. They don't realize that they're getting robbed.
Like, that's a hefty amount. It's $1,100 basically, just for clean numbers. That is a lot of money to be taken out.
And listen, I understand we need to be taxed. There's certain things like roads, things the government do. My point is that they've taken it to such an extreme level that now they're just looting us.
Yeah, and the bigger the paycheck, the more that's going to be taken out also.
Yes. So I'm not trying to say we shouldn't pay taxes and live in the wild, wild west. I get that they're good. They pay government employees. They pay, fire departments for certain towns. But most of this money is going to corrupt places. And I'm
and it's
saying
criminal.
there's just too much getting taken away. So that's the example. I've been using the salary example. So if you are told by your employer you make 80K, you need to know that you're actually making 60K, right? And you need to budget based off 60. And, that's for a salary employee. Same with an hourly. If you think you're making 25 an hour, it's really like 16, 17 after all these deductions. So that's where people go wrong. You're like, oh, well, that's $100. It's only 4 hours of my time. Well, no, it's actually 6 or 7 when you're not getting the actual 25 each time.
And for example, last year was the first year that I've received a bonus, and I'll just share with the audience. It was $5,700 was my bonus, right? So what I got net was, actually it's funny, it's the same number. It was $3,400. And I called and I was like, is this wrong? Like I thought I was being punked.
You think it's a mistake. I remember
I thought it was a mistake, yeah.
I got my first bonus, was the same situation. I ended up getting like 40% of what was told, and I reached out to my finance department. I go, where did this go wrong? And I found out that it was our great-great-great-grandparents that let this get so bad, and that's where it went wrong.
See, that's the problem, is like it's basically... you're taking home 60% and they're taking 40%. Like after doing taxes myself now for a couple of years, I've kind of just started to realize that that's about what the percentages are, and that's what's criminal.
Yeah.
But while we're on the topic, I feel like a little history session would be beneficial so we just understand a little bit about where this came from.
Yeah, so I looked a little bit deeper into income tax recently, and the start of the income tax that we know today, there were different taxes in the past, but the one that we're used to originated in 1913. And the purpose of it was to raise money to fund the World War I that was coming. So think about it. There was a lot of pride in America at the time, and in your country, you're about to go to war, and it made sense. So yeah, I'll give some of my money that I make to taxes to protect my family, to keep us safe from this world war. And it was originally supposed to be temporary. But since that time, it has stuck, it has not left, and it has only exponentially risen from the percentages that they were taking.
Like, this just needs to be reevaluated, given that this is a century and a decade old.
Yep, exactly. So, my last note on this is, the people that collect income taxes, the IRS, she's laughing because I do this example. There is no difference between the IRS and the mafia. Let's say the Italian mob. Right, so that's my clickbait time.
Hot take,
let me explain. No, because the Italian mob, the mafia, what they do is they'll come to your business, they'll knock on your door, and they'll say, you need to pay us money every month so that we can protect you. And what are you protecting me from? Basically, what the mafia will do to you if you don't comply and pay them. Right? Maybe they'll help you from some other crime, but most of the time it's just because if you say no, they'll come back and destroy you. Right? The IRS is no different. They're saying you need to pay us 30, 40% of your income so that we can protect you. And what is the IRS protecting us from? What they'll do to us if we don't pay them. They'll throw you in jail. They'll ruin your life. They'll close your business. So the IRS and the mafia are both forcing you to pay them insane wages to protect you from what they will do to you if you don't pay. So I wanted to leave it on that note.
Moving on from that hot take, and we're going to go into our lifestyle segment.
Let's take it down to something a little more personal now. That was...
Just leave it at that.
Something I'm very passionate about, if you can't tell.
It's kind of true, but let's just leave it at that. So into our lifestyle topic, we want to talk about a healthy relationship with alcohol. And I do just want to be very weary about this because I know that this is a disease and people are struggling with this. But I just want to bring awareness to it so it doesn't get to that point for some people.
So this isn't advice for people that are actually, really struggling. I know there's addiction, withdrawals and stuff. This is more of your typical person in your early mid-20s partying too much, going out, drinking too much socially, and how scaling back can really help. And we kind of want to share our story a bit.
Yeah, I personally had a case of the early 20s and I was just going out nonstop. I was coping, to be honest, though. I was very anxious when I was drinking this much, and I just was drinking to not feel it. So that's what we're trying to avoid here, because I was able to reevaluate. You were a person that kind of like helped me realize that I didn't need to go down this path, and might have gotten scary had I not realized.
Yeah, and it's important. A lot of people out there right now, you may be drinking a lot just because you're partying and having fun, but it's just important to think, if you don't, I'll say, have a handle on it. If you don't keep in mind that you can't overdo it, you may be fine now, but 2, 5, 10 years down the line, you may develop some issues. And, if anything that you get out of this part today is that, you just have to be mindful of your alcohol consumption.
I was just going to say that.
It can be a fun tool. It can be great, but it can also be the devil. And it just depends on your mindset and how you choose to use it.
So I do feel like a lot of people forget that alcohol isn't a depressant. It is a depressant. And again, people use it a lot to cope. So all we want to do is, I don't want to be a hypocrite. We still drink, but we are just mindful of when we do it and how much we're drinking while we're doing it. Yes. So that's the first step, I would say, of being mindful and cutting down. Just really be honest with yourself. How much am I drinking? How many times a week? Like, even if it's just one glass, like, just be honest with yourself and reevaluate. Like, do I need that drink tonight with dinner? Do I
touch on that too, right? Because you said two great things. You said how often and how much. So that means, like, when you do choose to go out, we all have big nights. We have a few big nights that we just did, friends, parties, whatever. It's not over drinking the occasion. You don't want to drink until you're blacked out. Like, we've all had nights when I was in college.
Which is what I used to do. Like, I would go out with the intent to black out, and I can't fathom that anymore. If it happens by accident, I'm like, I have scaries beyond belief. It's not like...
And even I had that sometimes.
It's not so fun.
I was out in college and I don't really remember what happened most of the night, and that can't happen, right? You need to be able to know when to stop, and then also that less often. You don't have to drink for every occasion. You go out to dinner, you don't have to order one. I have a lot of networking events, and it's very tempting to drink there. Some of them I do.
Yeah.
But if I'm doing a bunch of networking events, some of them I'll just order a Coke and hold it because I'm trying to be mindful. I don't want to drink. I have a networking event Tuesday, Wednesday, Thursday. I'm not drinking all week. Now the weekend's here. Like, you have to take a step back and realize your consumption and when it's good and when it's bad.
Yeah, and I'll be at a networking event tomorrow, and no one's going to know that I have actually seltzer in my cup. Like,
exactly.
So, not saying to do that for every time. And again, we don't want to be hypocrites. We are saying you can still drink, but just be mindful of when you're doing it, how much you're doing it.
Oh, and I have a good one. And say the purpose of it.
Yeah.
Drink to celebrate.
Yes.
Drink because happy things. Drink for success. Do not do it because of stress.
When you're feeling upset, depressed, sad, anxious, like, that's not the answer. You'll normally double down when you do this. Like, if you had a bad day, like, what good is going to come out of you drinking? You're going to spiral.
No,
I'm speaking from experience.
Like, you had a bad day at work, something bad happened, don't grab that drink because you don't want to make that negative association with it, because that's how it goes down a bad path. You passed an exam and you are now licensed to be a CPA, hell yeah, go out and drink, right?
Yeah.
Have fun.
You got a new job, go get a drink.
You got laid off. Do not drink.
The celebration association is just what we're trying to highlight rather than a coping association.
Yes, because that's when it's harder to control, because our brains are interesting mechanisms, and it gets down, and then when it looks for that alcohol to pick it back up, that really is what can hurt you.
And once you get a handle on this and you've done it a couple times, you're able to control. And honestly, first of all, you're going to save more money when you go out, because
this is true.
I am a cheap date at this point. I feel like I just get tipsy off 2 drinks, and I never would have seen the day like a couple years ago. So after I realized, I need to cut down and just be more mindful, I've noticed that I've been significantly happier. I do have less anxiety. I've been 1,000 times more productive, and I just feel like I can wake up easier.
No, it's so true, because we've been going to the gym in the morning now, as we've talked about on here, and if we were, say it's Thursday night and we were thirsty Thursday going out and drinking, that 6:30 wake up on Friday would be brutal. We wouldn't be as good in the gym.
We wouldn't go.
We have discovered more time in the day, essentially because we stopped drinking, because yes, drinking wastes the night, right, that you drink that time, but it also wastes the next day and the next morning and what you could have done. There's an opportunity cost of drinking that's not just the time you spend doing it.
And I'm speaking for myself here, like, you're gonna eat really bad food probably when you're drinking, because you just have like the munchies for something greasy. You don't want a salad at that time. Like, you're gonna come home from a night out and eat a salad. Like, let's be real. Exactly. It's also just better for weight loss when you're drinking less. You can build muscle better, and drinking is calories. Like.
Yep, it adds calories and deteriorates muscles. It stops muscle growth. If you have gym goals, alcohol is definitely not your friend.
Yeah. So again, balance that out. So how we can incorporate balance into here is just don't force it, less consumption, and I think just like not the habitual association.
Yeah, no, it's so true. Like, by habitual association, you mean just getting used to doing it because of something happening, right?
Yes.
Yeah, so like I love this example as a dude, football Sundays. There's nothing better than cracking a cold one and watching some football, right? But you can't use it as a crutch every week. You can't be like, oh, it's Sunday again, time to sit on my couch and drink a six-pack and watch football. Yeah, it's okay every now and then if you want to, hey, go out with my friends to drink and watch the games, but that can't be an every week thing. You can't associate footballs on drinking because now all of a sudden you're drinking Sunday too, in addition to whenever else you drink. It just adds the extra time. You know, it's okay to do sometimes, just not 100% of the time.
Yeah. So with balance, you want to know when enough is enough, know when to cut yourself off, let loose, have fun, but there's a time where you need to cut it quits.
Yeah.
And
we still drink, we still have great times. We're just much, say, healthier about it.
Mindful.
Mm-hmm.
And especially know when to call it quits when you're in a work environment. I know you mentioned the networking already, but last thing you want to do is if you're at a company party and make a fool of yourself because you got too drunk. You don't want to be that person.
Exactly. It may seem comfortable and fun, but then you'll go home, realize what you said, and maybe not have a job.
That's the anxiety. Yeah. That is the anxiety. And also, just before we move on, we did not discuss balance in our business segment because you cannot incorporate balance with taxes.
There is no balance with taxes.
I just had to throw that out there because we talk about balance in every segment, basically, even try to incorporate into our real estate sometimes. But there is just there's no balance.
Yeah, I like that you mentioned that. There's no balance in taxes. They're just going to keep squeezing from us. All we can do is just increase what you make, increase what you save, and be mindful of what you actually make compared to what they tell you make. That's all we can do right now.
Yeah. So,
on the
speaking
taxes.
of that, for our real estate topic, we want to discuss the mansion tax.
In New Jersey.
So the mansion tax is a 1% tax of the total sales price of when a buyer is purchasing a home, $1 million or over.
So basically what that means is if you buy a house at $1 million, there's a $10,000 extra fee on the closing cost. If it's $1.5 million, you're paying $15,000 extra.
Yeah.
Right? So, and this is in New Jersey. The mansion tax is different everywhere. Just where we're from in our market, this is what we're seeing.
And a lot of listing agents, what they'll do when they have a home that's going for around $1 million, they'll make it $999 because they want to avoid the mansion tax.
That tax. So that's what the mansion tax is. Now let's go into the history of this because we were discussing this and I've discussed it with clients. We really think that it's time for this mansion tax to be adjusted.
And reevaluated because it is astronomical, the appreciation that the real estate rate has gone into, and the value of $1 is no longer the same. So this mansion tax started in 2004, August 2004 to be exact. And we're the full 20-year mark.
20-year mark,
So
this year,
that's about time to reevaluate.
Yeah, so let's go over some numbers. Talking about just the fiscal dollar, in 2004, $1 million, what it's worth today in 2024 is now $1.66 million. So just based off of the money aspect alone, that $1 million is now 1.66 with inflation on this. So that's one piece. And the second piece is that real estate has appreciated at a much higher rate than the dollar. So that's just the dollar alone. We're not even talking about the fact that every house is astronomically more expensive than it was. So the percentage of homes that fall under this tax is so much higher today than it ever has been before. And the government is just profiting off of it.
And in my opinion, I think it should be reevaluated to $2 million.
You think that $2 million is safe?
Yeah, because like what we just said, it's 1.6. It should minimum be 1.66.
Just to keep with inflation.
Yeah,
with
because that's the value. And just because you had $1 million home, that's not a mansion.
Yeah, could we talk about that too? This is called a mansion tax, and it's about purchase price. But when I think mansion, I think space, square footage. So I get that you're saying $2 million should be the max purchase or the minimum purchase price to do this. Well, I think there should also be a stipulation that says it also needs to be a certain amount of square footage, like 7,000 square feet. I think it should be purchase price and square footage.
In a perfect world, it would be like that, but then that would mean our
disqualify.
Government would have to work with us and try to save us money.
That would disqualify homes that the government gets extra money from. That's why they're in no rush to increase this to today's numbers.
Yeah. So given where the world is at, the real estate market, normal homes are going for this mansion tax. Like 4-bedroom, average looking, but they are in these like beautiful locations, and that's what drives them up.
Yeah, if you're in the right town in New Jersey, you can have a house that looks normal that may be $300K.
Very nice, don't get me wrong.
Nice, but normal. That
Right.
may be $300 to $400K somewhere else. They're going over $1 million just because of the town that we're in New Jersey. And now they're getting hit with these mansion taxes, and it's just out of control.
It's getting criminal.
Yep. So we just want you to keep this in mind. If you are looking at a house that's creeping around that $1 million, you're going to have an extra 1% in closing costs for every dollar above $1 million you get. And we don't think it's fair. We think it needs some adjusting, and we want you guys to comment as well. Let us know what you think. What do you think the price should be to start this tax? Do you think they should add a square footage into it? I want to hear from you guys what you think this mansion tax should be.
Us starting the conversation and then you guys starting an uproar, that's the only way we're going to change things at this point. Like, it's not fair.
I want to go over some ways that you can potentially avoid this mansion tax.
Okay.
There's not many, but I want to end this on a positive note. So one is, obviously, buy a house less than $1 million. One way to avoid this tax is to bid, like Gabby said, $999 on a house, or to keep your search under $1 million.
Listing it $1 right below $1 million.
Yep. Another way to avoid it is to transfer the property in a trust or in an exempt entity. And
this is like a specific situation, like a family.
Yeah. So what I mean by this is, like in a family situation, if you have a $2 million property and you want to give it to your kids, selling it to them, if you transfer it into a trust, you may be able to avoid this tax. Now, I'm not a tax expert. You need to ask your attorney or an accountant, but there are plenty of ways, maybe in an LLC and, trusts of some sort to transfer the property over to avoid this instead of just selling it. And the last way, which is very unlikely in the current market we're in, but when it changes into a buyer's market, this is a possibility. You can negotiate with the seller to pay for some or all of this mansion tax for you. So we're not seeing that today, but it's not out of the picture.
My experience, I haven't seen much of that, but hopeful for the near future.
Because it's a seller's market.
Yeah.
But yes, in the future, that may be a way. And, that's really it. The only other way to avoid it is to voice your opinions and try to get our government and our state to up this to the numbers that it should be. If you want to do equivalent to 2004 when it came out, we're going to need to up these numbers.
Yeah. So another thing also, just to be aware of with the mansion tax is there is going to be higher closing costs with like your homeowner's insurance and your appraisals. So just be aware of that.
Yep, with a higher price home, other closing costs are higher. Not the mortgage. We are the same fee no matter what. But yeah, survey may be more, the appraisal, homeowners, those things are all going to be more when you buy a more expensive house.
Yeah. And also pay attention to the survey because it outlines basically the perimeter of your outdoor space. Like with a larger home like that, you are going to tend to have more space. So make sure you're paying attention to all of this because it outlines all the boundaries.
No, it's very true because the survey also shows if there's any easements on the property. Mm-hmm. And quick, for those of you who don't know, an easement is basically something in the property that's owned by the town, not you. So let's say there's a gas line through the backyard. That's an easement. So you bought this beautiful yard and you want to dig a pool and that's your goal, but there's an easement in the middle of the yard with a gas line. Now you can't dig a pool there. That is very important to look at in the survey since you're paying so much money.
It explains things like that for any future plans you may have. So that was a great example.
Yep, exactly.
Cool. So just wanted to bring awareness to that. We were very passionate about a lot of these topics today. So I hope that you guys learned a little something.
Exactly. And if you have any questions about any of these or comments or, notes from yourself, please reach out.
Or if you want to cause an uproar to the U.S. government with us, let us know.
I don't know. I really think it is up to our generation to try to bring notice to how crazy some of these taxes are. Still pay taxes. I agree. But we need to keep some of our money. Like, this is ridiculous. Yeah. I just feel like the country's getting robbed and looted, and I'm breaking it down for you in front of us here. And please pay attention to this. Spread this word. Share this video because I really think this is one of the most important things that we've talked about.
So far, yeah.
Well, and on that note...
If you like this type of video, like and subscribe. Thank you so much for watching and listening. We appreciate you, and we'll see you next week.
See you next week.
Bye, guys.